cash. Running up digits, counting up six stacks. My money flipping, let's take a trip, splash. Standing on business, tycoon rich. I'm rich. Look at my chips, yeah. I'm getting rich. Running up digits, counting up six. My money flipping, let's take a trip, splash. Standing on business, tycoon rich. Cash.
All right. Good morning. Good morning. Good morning, everybody. We are going to get started here. 1 second. Okay. Let me go ahead and share my screen for you guys. Okay. Awesome. All right. So this morning, we are going to kind of get right into it. I'm going to talk about what we are trading. I'm going to talk about the strategy that we use, how we're using third parties to leverage our actual trading here, and then we're going to get right into the markets, okay? So the first thing I want to talk about is what we're trading, okay? So we're trading the NASDAQ 100, NAS 100, okay? So for those of you all that are new, the NASDAQ is an index, okay? And this index caters to investors interested in innovative, growth-oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders, driving economic progress and technological advancement. Okay, so these are some of the companies that are comprised of the NASDAQ 100. Like they mentioned earlier, we have Apple. Okay, you guys are familiar with Adobe, Microsoft. All right, if you look at some of their consumer branch, you have Pepsi, Coca-Cola, Monster. For their tech side, you have, of course, Microsoft and Apple, but you also have Intel, Intuit. So these are just some well-known companies that you all are familiar with, and so it's an index that averages the performance of these companies combined. Okay, so when we get into our strategy, this is for futures trading. We cover a couple of steps, right? We try to keep things very, very simple. Okay, very simple. And so the first step is we use the STC indicator via TradingView. Okay, so TradingView is a trading platform for those of you all that aren't familiar. Okay, on the 15-minute chart to determine directional bias for the trade. Okay, so the STC, let me just explain what that is so you guys can understand what that means. All right, so if we go to the 15-minute chart, and don't mind me today, I'm a little under the weather, but we're here, so I just wanted to kind of give you guys a heads up on that. Okay, so here we go. We have the 15-minute chart here. Okay, so the STC is this here. Okay, it's this indicator here. Okay, and with the STC, it kind of looks like the formation of it looks like a roller coaster in a sense, right? And so when you're at the bottom of a roller coaster, you're expecting for the roller coaster to go up. So if the STC is at the bottom, we're expecting at some point price will have to correct itself and go up. Okay. If you're at the top of a roller coaster, you're expecting for it to go down. Okay. And so at the top of the STC, we're expecting price to go down. Okay. What this terminology is called, when price is, I'll give you the formation again. Okay, when price is at the top here and we're expecting price to go down, we're looking for sales. So this is the overbought area, meaning that there were a significant amount of buys that got price to this point. Now it's time for the market to correct itself to go down, because the market doesn't just move straight up or it doesn't just move straight down. Okay, when price is down here at the bottom here, you'll see that if you go to the upside here, okay, this is called oversold, meaning that there were a significant amount of sales and now it's time for price to correct itself and we're looking for potential buys. Okay, so right now in our current situation, if we're looking at the STC right here, this is current price right here. Somebody tell me in the comments section, are we overbought or oversold? Tell me in the comment section right now, just based on what I just taught you guys. Are we overbought or are we oversold? And if we are, what are we looking for, buy or sell? Are we overbought or oversold? And if we are we looking for a buy or sell? Tell me in the comment section, guys. What are we looking at here? And let me make sure. Okay, so I'm gonna make sure that you guys can see it. So right here we have it. This is our STC. Remember, when we're at the top of the STC, we are what? If we're at the top of the STC, we're at what? And we're looking for price to do what? Tell me in the comment section. On the 15-minute chart, are we overbought or are we oversold? Okay, let me know. Good morning to everybody that just joined. Good morning, good morning, good morning. Okay, are we overbought or oversold right now? What are we right now? Somebody tell me. Okay, and while we're waiting for that, okay, so Michael says overbought. Absolutely, Michael. Okay, so Mary says oversold. Kelly says overbought. Okay, so let me see. Let's look at this, right? Because we know we're on the 15-minute chart now, right? On the 15-minute chart, we are, if we look at the STC, we're overbought, meaning that there were a significant amount of buys that got us to this point. Now, it's a chance that price can be potentially trying to correct itself. Okay, so since we're overbought, are we looking for buys or sells, guys? Are we looking for buys or sells? When we're at the top of the STC, we know with sells, we want price to come down, right? We want price to go down. And we know with buys, we want price to pretty much go up. Okay, so with buys, we want price to go up. So what are we, guys? What are we right now? Are we looking for buys or sells right now? Are we looking for buys or sells? Let me know in the comment section. Are we looking for buys or sells? Looking for sales. Absolutely. Absolutely. Awesome. Awesome. Great job, Michael. Okay. So great job, Mary. Great job, Mary. We're looking for sales. Absolutely. Okay. So now that we know that we're looking for potential sales, we have to look left to see where there were significant areas that there was a sell-off. Okay. And I see a level right now where we see significant sell-off. We see this large red candle right here. There's a lot of liquidity right here. Okay. So that tells me that there are some significant sellers at this level. Okay. At this 21,743 level, there are some significant sellers. Okay, so if price gets to this level or near this level, we can expect a possible sell-off because we see multiple times price sold here and went down. Okay, price sold here and went down. Okay, so this area was a strong level of resistance. Strong level of resistance. Now, for those of you all that aren't familiar with support and resistance, it's a very simple concept. So the resistance is your ceiling, and the support is your floor. Okay, resistance is the ceiling, and the support is your floor. Okay, so with the resistance, think of it like this. Okay, so let's just say this key level right here, and I'll talk about key levels in a minute. But let's just say you threw a ball to the ceiling. The natural reaction after the ball hits the ceiling is for the ball to come down. Okay, so let's imagine that this is our ceiling right here. The ball came up to the ceiling and it came and bounced down, right? It came back up to this area here, right? And it dropped down. Okay, so that's our resistance, meaning price is resisting to go past this level right now. So there's a high chance that when we approach this same area, that price can resist to go down, to go past this level and go to the downside. Okay, now support is the opposite. Okay, so support is the floor. So let's just say, for instance, this is our floor right here. If we threw the ball down to the floor, the natural reaction is for price to what? Move up. Okay, so if we throw the ball down to the floor, the natural reaction is for price to what? Move up, bounce up, right? So with support, we look for buys, and with resistance, we look for sells, right? So here's our buys here. Okay, if we see how price came down to this floor and it bounced up, price came down to this floor and now it's bouncing up. Okay, so that's how you guys can kind of get a general concept of support and resistance. All right. So that's the first step. Okay. We went through the first step, which was use the STC indicator on a 15-minute chart to determine our directional bias for the trade. So as we see here, we already said that price is what? Overbought now on the 15-minute. Okay, so it's overbought on the 15-minute. So that means that our directional bias for today is we're looking for sales. We're looking for sales. We're looking for that roller coaster to come down. We know with sales, we want to come down. Okay, now just because one of the things that we have to be objective is, even though that's what this shows us, we have to be cognitive of what's happening in the market, because at the end of the day, price could still be buying and moving upward. Okay, so if price breaks this, what level is this? 21,780 level, then we're probably still headed up in the market and price is not ready to correct itself. But if we get a nice rejection around this area or this area, then price is probably ready to come down. So we just have to kind of look at those signals and look at price action to kind of help us determine that. Okay, so that's the step number one. Now, step number two, once you have determined your directional bias, wait for the STC on the 5-minute chart to align with the 15-minute STC and wait for the alert. Okay? So we wait for the alert on the 5-minute chart. So let's go to our chart and let's go see what the 5-minute looks like. So again, 15-minute tells us what to look for, directional bias. So we're looking for sales. Okay? 5-minute chart tells us when to get in a possible sell, our entry. Okay, when should we get in? So if we see a sell signal, right, especially around this level right here, either here or here, and we get a nice bearish candle, we look for a possible sell. Okay, we're looking for a possible sell. And if we zoom out and we look at market structure, let's go back to the 15-minute and look at the market structure. Okay, we're just kind of caught in this area here, guys. We're just kind of caught in this little ranging area here. Okay, so we're kind of just stuck here. There's no clear direction. So sales at the top of a range, high probable. Buys at the bottom of a range, high probable. Okay, so those are the type of setups that we're looking for when it comes to the strategy that we're using. All right, and so that's what we're doing. That's what we're looking for right now, guys. We're looking for a potential sale here. And while we're waiting for that sale, we're going to talk about how you can leverage and use these concepts and make extra money without having to basically risk as much as your personal trading capital. Okay, so one of the things that we're doing right now, the students and I, we're actually doing a challenge, a $50,000 to $750,000 worth challenge. Okay, and with this challenge, what we're doing is we're pretty much trying to leverage a third party's capital so that it'll put us in position to make extra capital ourselves. Okay, and that's one of the biggest things when it comes to trading. The top three things I would say is risk management, and we're going to talk about that really soon. Risk management, having the amount of funds to actually be profitable, and then also not only that, but basically controlling your emotions in the market. Some traders say be emotionless, but that's not realistic. At the end of the day, we're human. We're still going to feel the emotions. It's how you respond to those emotions is what determines how successful you'll be as a trader. Okay, are you still sticking to your rules even though you might have made a mistake or took a loss or whatever the case is? Are you still sticking to your rules? And being consistent, right? Showing up every day, being disciplined. Okay. A lot of times what will happen is the discipline factor is what will kind of differentiate if you're going to be successful long term. If you're not showing up every day on time, if you're not showing up every day with a positive mindset and just kind of keeping your rules and stuff in front of you, then you're gonna have a hard time. But if you are doing those and fixing those small things, I promise you'll start to see long-term growth. Okay. All right, cool. All right, guys. So let's talk about, because right now the market is still moving up, and I actually like to wait until closer to like the 9:15, 9:20 ish area time frame. I'm sorry, to get into a trade before hopping in. So we'll let that kind of play out a little bit more. Okay, and while we're waiting on that, let's talk about the leverage factor. So we use a platform called TopStep. Okay, TopStep is a prop firm that basically allows traders, if they can prove that they can pass the trading combine, then they get access to funding. Okay, so if we go to earn funding, this is how it looks right here, guys. Okay, so what they're saying is that you have 40, if you pay $49 for their subscription, you get access to a $50,000 combine, trading combine. Okay, and with the combine, if you're able to grow this $50,000 account to $53,000, and shout out to Robert, he is actually less than $1,000 away from this. So that's one of our students in the academy. So great job, Robert. Okay, so $3,000. Okay, so if you grow this $50,000 account to the $53,000 account, to $53,000, then you pass the trading combine. Once you pass the trading combine, you're then in position to now have express funded account. And so what the express funded account tells you is that um, after the first 5 consecutive wins, you're pretty much in position to take out at least 50% of your capital. So if you grew your account to 10K, you could take out 5K. Okay. Now, if you um, get 30 winning days, then you have access to take out 100% of your capital. But I recommend to leave some in because you want to have some capital to trade off of so you can use it as a cash flow for you every month. Okay. What it also says is if you lose $2,000, then you've breached your account. Okay. So you want to be very conscious of this and make sure that you stand within those parameters. You also get a daily loss limit, which is $1,000. Okay. So you want to keep that in mind too. I always tell my students try not to lose more than $500 in a day, which is about 1%. Okay, and then you have the opportunity to get access to 100,000 or 150,000. Now, to get to this 750,000, you just get multiple $150,000 accounts, right? So you can scale up to that point. Okay, and what'll happen is you just basically taking a trade on one account, but it's copying to several other accounts. Okay, so the goal is to pass this one first. Okay, and then we scale and work our way up. Okay, so great job to everybody that has a live trading combine that's moving right now. That is very, very exciting. And we're going to get that done. The goal is to have at least our first funded account by February, between mid and end of February, and scale it to 750,000 between March and April. I think that's a very reasonable and attainable goal. So while we are waiting, I'm going to go back to the chart here, guys, and we're going to talk about the we're going to talk about the risk management piece. Okay, risk management. So with the risk management, what I want you guys to understand, we talked about this last Friday, about being intentional about our risk management. So we looked at our numbers, and we were on basically, if we round it off, we're around an 80% winning ratio and 20% um, losing losing percentage, right? Which is really good. Okay, and I think the exact numbers was like 77 and 22% or something like that. Okay, so with knowing that with proper risk management, there's almost and it's almost inevitable for you not to be successful. Okay, it's almost inevitable for you not to be successful. So what we're going to look at here is some possible risk management setups here. Okay, we want to always make sure that we're at a 1-to-1 ratio or 1-to-2 to be that's actually preferred 1-to-2 ratio, but minimum 1-to-1 ratio. All right. So what that means is this. So 1-to-1 ratio means that if I'm risking $300, then I'm set to gain $300 as well. I should not be risking $500 to gain $200. Okay, because now my risk is higher than my possible reward. Okay, so that's the risk ratio there. If we get a 1-to-2 ratio, that's even better. Okay, so 1-to-2 ratio, we're looking for this here, where we're risking $300. Okay, but we're set to gain twice as much, so $600. Okay, and then 1-to-3, of course, is $300 to $900 setup. So those are the setups that we're looking for right here. And I like the way this candle is coming down too. We're at 906, so we might be getting our sale soon, guys. Yep, might be getting our sale soon. Okay, so let's go ahead and start looking at our ratio here. All right, let's get the exact numbers so we're prepared when this sale comes in. We got about 3 minutes to prepare for that. So what I'm doing is I'm going to my short position. Okay, and I'm gonna put my short position somewhere around here. Okay, and if I was to set my stop loss, I would set my stop loss about right here. Okay, which is 21,750.25, which is about 109 ticks. Okay, now if we come down further, then I have to bring that down. Okay, so let's just say it stops right here. Let's just give it a little bit more space. Okay, so that's 136 ticks right there. Okay, so with 136 ticks, okay, based on where we are, and then our first TP will probably be like right here. Okay, so we're looking at 125 ticks. So if we did the risk to reward ratio here, we'll see, and you can kind of see it too from here, but I'm going to show you guys from the calculator so you can see a clearer vision of that. Okay, so if we were to get into this position at 3 contracts right here, okay, we can see that we're risking $204 set to gain $187. So it's not exactly 1-to-1, but it's not that far off. Okay, we're like a couple of dollars off, so that's not that bad. All right, now if we're talking about where this was $300 and this was $200, then we're off the mark. Okay, we're off the mark. So right here, what I would want to do is and we gotta wait till this candle close out because we're getting some support right here too, guys. This wick right here, so we got to see if this closes out strong. But what we're looking at is potential let me see here. Okay, so this will be TP1 here, all right, and then TP2 would be down here, probably down to this level right here. Okay, so if we look at that setup, that will put us a little bit over the 1-to-1 ratio if we hit TP2, right? But if we're basing it just off of TP1, which is right here, that's 144. So we're a little bit tight on that, right? When it comes to the 1-to-1 ratio. So we have to adjust that. All right, we got a minute left on this candle right here, guys. So we'll see where our entry is, because if our entry is moved up here, now that's a different scenario. It just depends on where we enter the market. Okay, where we enter the market determines exactly where we need to be. Okay, so now with this entry, if we enter right here where the candle is, then that makes a difference, because now we're risking 168 with a set to gain the potential 180. So that's over our 1-to-1 ratio. Okay, so we have to be very intentional about making sure that our risk to reward is within the same price range. Okay, so that's what we're looking at, guys. Any questions on that, on what I just explained? Any questions on that? Okay, we got 20 seconds left on this candle. Let me know in the comment section if you have any questions about what I just explained. Okay, let me know if you have any questions. And if not, that's fine. Okay, so let's see what we got here. We got 5 seconds left on this candle. Okay, and no sell signal yet, so we're not ready yet. Okay, so remember, based on our rules, we're waiting on the sell signal to come in on the 5-minute chart. Okay, we're waiting on this sell signal to come in on the 5-minute chart. All right, so that's what we're looking at. Okay, so this is our setup, but it could always change because price could probably end up down here where we enter the market, right? So we'll have to see what happens. Okay, so we got about 4 minutes and 30 seconds left on this chart, and we'll kind of go from there. Okay, so you guys should have your short positions and measuring how much you want to risk on this trade. Okay, so based on the setup right now at 3 contracts, I could probably put in a little bit more contracts because today what I want to risk is no more than $300 on my trade. Okay, no more than $300 on my trade. So I'm at 228 right now with 4 contracts. Let's see what 5 will get me. Okay, 5 is still at 285. Let's see what 6 will get me. 6 is a bit too much. All right, so 4 contracts it is. That's what I'm looking at, 4 contracts. Okay, so now I know that 4 contracts within that, that's if I stay within this 114 tick kind of like spacing here. So we'll see. We'll see. Okay, but looks like we might be getting a sell signal here. Let me check the comment section, make sure I'm not missing any questions. All right, cool. Looking good. All right, so let's go here. And let's see if this is our sell, guys. Let's see if this is the sell that we enter the trade. And we enter the market. We're at the 9:11 mark. So we are getting close to market open. Okay. And let's see if we can get at least TP1 and see if TP2 will allow us to get in as well. Okay. So right now we are 2 minutes and 40 seconds. We got to let the candle close, guys. That's a very important lesson. Like, you don't want to make a definitive decision on a candle that hasn't figured out which way it wants to go. The only way you'll know that is when it closes. Okay, so that's extremely, extremely important. Okay, so we are 2 minutes and 20 seconds away from this candle closing. And let's see if we get our sell, guys. Our directional bias for today is a sell. And if I do get into this trade, I will be posting the numbers in the chat. In our private chat, I will be posting the numbers in the chat. Okay, so you guys can have that. All right, here we go. A minute and 50. Let's see what we get, guys. Can we get a sell here? Can we get a sell? All right, let's see if it closes strong. This could be used as support, or price could break through and we could be possibly headed to the downside. Now there's a lot of noise right here. Okay, there's a lot of noise right here, so we might, depending on how much volume we have, it might take us a little while to get the TP1, just depending on how much volume. But we'll see. Okay, we'll see. Less than a minute, guys. Well, almost less than a minute. And let's see if we get this sell here. Okay, let's see if we get this sell. So you guys should be ready, right? So what I like to do is I'll go ahead and click the sell, have my contracts already ready. Okay, and let's see what we get here. I think 250 ticks, no matter where we are, is probably a safe number. So that we let me see here. Yeah, that's 236. That's far up. Let me see. Won't need to be that far up. 167. Let me see if we pull it down here just in case price drops. That's 204. So 200 probably is a good amount of ticks to look for our entry, guys. All right. So I guess that wasn't the candle, guys. Didn't close out strong, so we're waiting. And that's another thing, guys, is patience is really important. Okay. One of the things that can also be a huge thing for traders is being patient, not being anxious. You know what I mean? Not just being impulsive, especially when you see those large candles. Those large candles can get people trapped if they don't have the proper setup. Okay, now if that large candle happens within your setup, that's a beautiful setup. But if you're chasing a trade, most of the time those trades don't end well. Okay, most of the time those trades do not end well. So we're waiting. We're waiting, guys. We're waiting for our entry. Patience is key. Okay, if you got any questions, please let me know. Let me know in the comment section if you have any questions, and we're gonna go from there. Okay. And I called a buy yesterday. That was a pretty decent buy. So anybody that took advantage of that, congratulations. And we can actually go take a look at that while we're waiting. Let's go take a look at that. Okay, so this was a buy yesterday. All right, so I basically kind of let me actually do a replay. Okay, so I called the analysis around this part of the market right here. Okay, and so what I saw was on the 15-minute, remember our analysis is what our directional bias is wherever the 15-minute chart is. So we can clearly see price was oversold. So that means that we're looking for buys, right? This was the trade from yesterday. Okay, so what I said was on the 5-minute chart, there's a couple of things you want to look for. Price to kind of come back here and we get a buy somewhere in this area, right? Or if price breaks past this level, then you want to get into a buy, okay? And so what happened, or you can probably catch a pullback and then, get in as well. And so what happened is if we press play, we can see price broke out here. So after this candle, I probably would have entered. I didn't trade yesterday because I wasn't feeling well. But if you would have entered here, right, you could have hit your TP1, which was up here. Okay. Hit your TP1. Here was another possible entry. Okay. And then you would have took that win as well. So that buy was pretty decent. Okay. So let's just see if we can get a decent sale today. All right. But that's just kind of show you guys the concept that we're using. It's very, very simple. Okay. We don't try to overcomplicate anything. All right. So we have a minute and 50 left on this candle right here. Let's see if this candle engulfs this candle. Let's see if this candle engulfs this candle. So for those of you all who don't know what engulfing candles are, very simple. Here's the candle here. Okay, let's just say that this is a bearish candle. And I'll come back to this, guys, because we got a minute left and we might be getting our sell signal right here. So I'm going to go ahead and get into a sell. Let's see. I'm not in one yet, but I'm getting ready for my sell. Okay, so if I do, let me see where we are. Up to here. It's about 172 ticks. Okay, so let's see. Let me do 172. Okay, so that's 344. So that's pretty decent. All right, so we got less than a minute, guys. Less than a minute. Let's see if it closes out. My stop loss has 172 ticks. My stop loss has 172 ticks. All right, I might have to change that now because it's coming down further. All right, I'm getting into a sale, guys. I'm in a sale now. I'm in a sale for 4 contracts. Okay, so if I'm looking at this, my stop loss is already where I want it to be. So my stop loss here, okay, is, let's see here. My stop loss is 21,753.75. That's where my stop loss is. Okay, so when I say that, that means that the price, where price is, that's where my stop loss is at, 21,753. Okay, and I'll show you how to edit that in a minute. Take TP1. Okay, TP1 is here. Let me go ahead and move that. TP1 is going to be, yeah, I'm going to put that here at 21,691. 21,691 for TP1. Okay. 21,691. Okay, 21,691. So I'm going to put that in the chat really quick for you guys. And sorry about if you guys can hear that noise outside. Somebody's car is going off. Okay, so TP1 here we have 21,691. Okay, 0.50 is my TP1. And TP2, if you guys are putting in two positions, for me, I'm just going to do one a day, but we're still going to track TP2. TP2 would be 21,680. Let me make sure that that's right. Yeah, 21,000. Let me see. Yes, 678.25. So that's where TP2 is. Okay. So TP2, and I'm putting this in the chat as well, or where my levels are. 21,678. Okay. 0.25. Okay. So those are my levels there. All right, guys. So I'm sitting in this cell, and let's see if we can close out with a win. Let's see if we can close out with a win. All right. That is so true. What are you referencing to, Mary? What's true? I kind of caught your comment a little late. Talk to me. What is true? Okay. So yeah, guys, we're just sitting. We're going to be patient. We let the trade play out. Okay. What do I mean by letting the trade play out? Meaning that we're not going to interfere with how we have our setup. Okay. So if we're in the sale, let's stay in, either hits our take profit or it hits our stop loss. When you interfere with your trade, it just messes up your setup. And so, because what'll happen is sometimes price can come up to this way and then drop back down and hit your TP. But because you tried to get out of your trade so soon, you took a loss that wasn't even necessary, right? And here's the thing. You're already prepared for the loss because you know how much you're risking. So it doesn't matter, right? Now the other side is you might see that price might get some retracement here, and you say, "Oh, let me go ahead and hurry up and take some profit." So now you messed up your ratio, right? Because now you're risking $300, and because you cut your trade short, you only gained $75, right? So now you're messing up your ratio. So you want to let your trade play out so we can get the full benefit. We can get the full benefit from what it has to offer. Okay, so let your trade play out, guys. Let it play out. Okay. All right. So let me go back here to the chat. Oh, not letting the candles close. Yeah, for sure, Mary. Those can be tricky, right? Those can be tricky. So and that's kind of like market manipulation in a sense too. They know that a lot of retail traders like to see big candles. So okay, here we go. Here we go. That's some good volume, guys. That's some good volume. That's some good volume. If we hit TP1, do me a favor. Put a fire in the comments section if you hit TP1 as well. Okay, but let's just see. Let's let it fully play out here. We still got some legs to go. Okay, and it's about to be 9:25. About to be 9:25. Okay, so here we go. We have 15 seconds left on this candle right here. And again, we do have a lot of noise right here. A lot of noise. When I say noise, it's just a lot of back and forth consolidation that's happening, right? So there's a high chance that we can get that same type of noise here. Okay? So just keep that in mind. So we wait and let it play out. Okay, so we got 5 minutes until market opens. 5 minutes. 5 minutes. This candle is still early. And like I said, we are approaching this area where we got a lot of back and forth action. So we could see some back and forth action here and then a potential drop. Or we could see some support and then we get a drop here. So we'll see, guys. We'll see what happens. Okay. We are now in the overbought area on the 5-minute chart. Okay. We're in the overbought area on the 5-minute chart. We're actually, let's see, let's go to our 15-minute. We're still in the overbought on the 15-minute. Let's see. We're in the overbought area on the 30-minute. We're in the overbought area on the 1 hour as well. So all of our time frames are aligned right now, guys. All of our time frames are aligned. So we'll see if the market is ready to continue to sell off, or if it is if it wants to continue to buy and push price up. Only one or two things can happen. Okay, so here we go. We have 3 minutes and 20 seconds left on this trade right here, guys. I'm sorry, on this candle. 3 minutes and 20 seconds. 3 minutes and 20 seconds. Okay, and let's see what we get here, guys. Let's see what we get. Patience is key. Let the trade play out. Let the trade play out. Do not interfere with your setup. Once you're in, let it play out. Okay? Let it play out. All right? So we have 2 minutes and 45 seconds left on this candle. And let's see how we do here, guys. Let's see how we do here. Okay? And again, my levels, let me just go back to that. Stop loss level is at 21,753. Okay, so for those of y'all who want to kind of figure out how to modify that, you can drag this number down here to that price level, or you can click on here and you can modify and just type in your price number here. So if I say my stop loss is at 21,672 or something like that, I can type in 21,672 if that's what I wanted to do. Okay, so just showing you different ways, guys. All right, nice rejection here. Nice rejection here, guys. Still got a minute and 40 seconds left on this trade. Still got a minute and 40 seconds left on this specific candle. I'm sorry. Okay, let's see if we close out. Let's see if we can close out. That was a nice wick there. That's telling us that this is our ceiling, right? Price tried to come up here. Think of the ball. He threw the ball to the ceiling. And now what is it doing? It's reacting. So that tells me that there's resistance here. Okay. All right. We got a minute left on this candle, guys. A minute left. That's a good sign. Again, if you guys hit TP1, please put a fire in the comment section for me. But let's see. We got to get there first, though. Okay, we got 40 seconds left on this candle right here, guys. 40 seconds. And then market opens actually in 30 seconds as well. So let's see what we get from market open. We know we typically see a lot of volume from market open. So let's see if we can get price to go in our direction here. All right. Here we go. 10 seconds, guys. 10 seconds. Here we go. All right. And now the market is open. Okay, here we go. Let's see what we get. Here we go. Nice movement starting the market open. That's good. Means we got some volume, we got some money in play right here. Let's see if we go in the direction we want here. Still early on in the candle. Still got a lot of time here. Still got a lot of time on this candle, guys. Okay, not bad, not bad. See how it closes out. Not bad though, not bad. Nice. TP1 hit, guys. TP1 hit. Go ahead and put your fires in the comment section if you hit TP1 as well. Beautiful. Beautiful. Go ahead and put your fires in the comment section if you hit TP1. Love it. Great job. Both of the Robs hitting that TP1. I love it. Yes. Great job, Kelly. Let's get it. Let's get it. All right. Let's see if this thing hits TP2. I'll give it about another 5-10 minutes to see if it hits TP2. Letting your trade play out. Don't let these candles move your emotions, guys. Just let it play out. And you're going to see wins majority of the time, okay? Great job, Kelly. Let's go. Let's go. Great job. Great job. Let's see if we can still hit TP2, though. See if TP2 is still in play. I think we can hit it, though, to be honest. If this candle closes and then engulfs, let me go to the chart real quick. So if this candle engulfs this candle right here, there's a high chance that we could hit this TP2. All right, so again, I'll go through the engulfing example because I was actually in the process of explaining that. But if we go here, right, here's our candle, okay, and then let's just say that this is a a bullish candle. So this will be considered a bearish engulfing candle, okay, guys. So we have here, we make this one green, okay. So here's our bullish candle, okay, and look at that thing moving, beautiful. Beautiful, beautiful. We get in and we get out. Get our money and we get out. And then that's another thing. Once you make your money, stay out. Don't get greedy. Take your win and keep it moving. Take your win and keep it moving. Okay? We got another day to trade. Alright. Market will be open. Okay, so let me just show y'all this example real quick of what I'm talking about. Alright, so with engulfing candles, the candle previous to the most recent candle is smaller than this candle. The body, okay, so this is the body here, okay. Those little lines at the bottom, those are wicks. Those are wicks, okay, meaning price tried to get there, but it didn't stay there, okay. When the body of this candle is larger than the body of this candle, typically price follows in the direction of the stronger candle. Okay, it follows in the direction of the stronger candle. Okay, now if that doesn't happen, then you'll see a different type of price action. But that's a bearish engulfing candle. Okay, it doesn't happen like that all the time, but that is a possibility. So when you guys are looking at that, that's what happens. See, we had an engulfing candle here. So here's the candle, small bullish candle, followed by a strong bearish candle. And what do we see? Price continue. Okay, price continue. All right, so that's a bearish engulfing candle. A bullish engulfing candle is just basically the opposite. All right, so with the bullish engulfing candle, this is red, so this is a bearish candle. Okay, and this is a green candle. Okay, this is a green candle. And then what you'll see is price, it'll look like this. Okay, so the body of this candle is larger than the body of this candle. So typically, because it's a bullish candle that's stronger, price follows. All right, so right now, this candle is closing and it's engulfing this candle right here. So there's a high chance that we could hit TP2, guys. We'll see. We'll see. But great job to everybody that took advantage of TP1. We're going to see some back and forth action because it is a lot of consolidation right here. But great job to everybody that took advantage of TP1, and we are done for today. We are done for today. Okay. Any question, comments, or concerns? Feel free to put that in the chat. And if not, we're gonna call it a morning, guys. Great job to everybody that closed out with a win. Let's keep this train moving. We got money to make. We got goals to hit, guys. We gonna get there. Let's keep building. Let's keep growing. All right. So great job. Thanks for everybody for tuning in. You guys will be back on here next Tuesday, same time. And let's get this thing rocking. Don't forget to like and subscribe. And I'll catch you guys on the next one. All right. Peace.